Welcome to Better System Trader, the podcast to help systematic traders of all levels improve their trading. We'll give you loads of expert tips and practical advice on system design and validation, money management, trading psychology, and many other topics. Whether you're just starting out or a savvy systematic trader, we're here to help you improve your trading and find more success. This is Better System Trader with your host, Andrew Swanscott.
Hello and welcome to another episode of the Better System Trader podcast. This is episode number 121, and today we're going to explore a topic we don't cover much on this podcast, and that is options trading. And the reason we don't discuss options trading much, well, actually there's a few reasons, but two of the main reasons is firstly because I don't trade options myself and have a limited knowledge of how to use them, but also because there are some real challenges with testing option strategies, which makes it difficult to backtest them systematically. However, there are some potentially huge benefits to trading systematic option strategies in a portfolio if you can overcome these challenges. Today's guest, Luca Giusti from QTlab, is going to discuss options with us, explaining the benefits of options and how he uses them, and he'll also share the solution that he uses to overcome a lot of the challenges of testing systematic option strategies. But we're not just going to talk about options either, we're going to discuss volatility, why it's such a critical aspect of trading that all traders need to consider, and how to factor volatility into trading strategies to reduce risk and increase performance. So let's get straight into it now and head on over to our chat with Luca Giusti. Hi Luca, thank you very much for joining us today. It's really great to have you here.
Thank you. It's a pleasure to meet you.
Now, before we get started, can you just give us a little bit of background on yourself and how you got started in the markets?
Yeah, sure. Well, I have a degree in economics, and I attended a PhD in Italy. I did start trading more or less 15 years ago from equities and equities option. I attended a seminar. But when I tried to use these techniques, most of them focused on buying option. Results were not that good. I did not quit, but I bought books and focused on selling options with strategies like Iron Condor, calendar spread, and so on. And my account balance was green again. So I decided to quit my job to move to Switzerland. It's more or less 7 years ago, and started my own company, whose name is QTlab, which stands for Quantitative Trading Laboratory. And I started providing educational services about trading. I realized soon that nothing lasts forever, so I started to look at the more scientific approach to the markets. I changed my approach from discretionary to systematic, starting to develop, to test and validate my own trading strategies in futures, and just started to trade commodities and futures index, forex, futures options. Well, I'm a systematic trader. This is my history. Okay, my background.
Yeah. So, would you say that you have any particular style of trading? Because you've got a really mixed bag of instruments there. So, do you focus on one particular style, or do you try and vary it across approaches?
Well, I'm a systematic trader, most on options market. So maybe it could sound a bit unconventional, but what I did in the last few years is to extend all my systematic work on futures to options trading, and approaching this market with the same scientific approach of futures with trading system. And this is maybe my main focus now. Okay.
Yeah. Okay. I think we're going to get to the systematic trading of options very soon. But before we get to that, you've kind of explained how you started out in options and you've continued that through to now. But what are some of the benefits that really appeal to you using options?
Well, with option was love at first sight. Trading option is not just trading the direction of the underlying future. It means trading volatility. And we know that forecasting volatility is easier than forecasting prices because volatility is stationary. So I love this stuff. And when it comes to trade to direction of prices or maybe also volatility expectation, it's just a matter of probability. But if you consider also the fact that you can earn money from elapsing of time, this is no more a matter of probabilities, it's deterministic. Time passes for sure, and most of the time I'm using strategies that benefits from elapses of time, and that takes into account volatility, and direction is no more the main focus when I trade option.
Yeah. Okay, well, let's dig into that a little bit further, because I know that there are a number of challenges to being systematic with options, and one of those can be data. Data can be difficult to access, and sometimes it's, there's errors and things like that in them as well. So what challenges have you found trying to get data for options, and how did you actually overcome those challenges?
Many challenges. I mean, historical data data quality is important, but the first problem to overcome when approaching options trading systematically was that I did not have any platform to test my strategies. I'm using TradeStation, multi-charts, Thinkorswim too platform, but none of them allows to backtest strategies combining futures options. What happened is that a few years ago, during one of my seminars, I met a C# developer, and we decided to build our own platform to backtest option strategies. First, we used .NET to code our strategies, but I'm not a developer, I'm not a programmer, so I needed something easier. So we developed our own language. We called this options language, and it's something similar to Easy Language, but you can ask the backtesting engine to buy call or to sell a put or exit the strategy whenever a condition was met. So you can code a strategy, you can backtest it, you can analyze its robustness, you can test it on different markets, you can move the parameters, look at all the equities in the same chart. So it's a powerful platform. And well, after a couple of years, we decided to take this proprietary platform public. So now, option trader, if you want, you can buy a license on optionlab.ch website. So we decided to take public this platform. When it comes to data, think about that. 11 years of S&P 500 future is with daily data is less than 3,000 rows. The same market with the future options data on that market is more than 12 million rows. So it's a huge problem to handle data with option chain. One of the problems we had to face was the quality of the data. So we had to develop some rules to correct any discrepancy in the historical data using pricing model. But I have to say that our preliminary analysis on the raw database, because we combine more than one database together, showed acceptable quality. So maybe I think that the most interesting things that happened was that when I started to backtest the first strategies, one of the strategies was a strategy that I'm using with Mechanical Protocols since 2011 on my account. I was quite impressed to see that the equity line produced by the backtester was so close to the real one I tracked in all these years. So this increased a lot our confidence and convinced us to invest a lot more on this software development. And this is what happened. So we created our own software to do that, and we faced all the problem, all the drawback with data, with the problem with automation, with options. There are many drawbacks working with option strategies, but we tried to overcome all them.
Yeah, that's a huge undertaking to build your own platform. Can you repeat the name of the platform or the website again, so that listeners can go there if they're interested?
Sure. The website is optionlab.ch. CH because we are based in Switzerland.
Yep. Okay, cool. I'll make sure to have a link to that on the show notes page as well, so people can find that easily. Now, I have to admit, I don't know much about options trading myself. So can you kind of explain in beginner terms, perhaps for me and for other people, how do you actually test strategies on options? Do you need to have the underlying there, or do you use a combination of them, or how do you actually do that?
Well, I always trade together options and underlying. I prefer working with when the underlying future is available 23 hours a day, so that specific market. But usually after I enter an option strategy, I use the future to control risk. I takes this strategy, these options to the expiration, and I control risk using the underlying future.
Right.
I also work market like sugar, or like market that with a few hours open during the day. I think that in a diversified portfolio you can you can follow also market with problem with gap, with limit lock, with similar situation. You can handle them in a large portfolio. So I always combine futures and options. I think that options are very interesting instruments, but their drawback is their liquidity. So maybe sometimes you can't exit the strategy just buying back the option you sold 3 days before in the same condition when you sold that. So using future that is a more liquid, much more liquid instruments can fix that.
Yeah. Okay. So what do you actually do if the option that you want to enter or exit isn't trading? Like, how do you handle that? Do you manage that with the future?
Didn't get exactly. What do you mean?
So what happens if the option that you want to enter isn't trading? How would you handle that?
It's not trading. Okay. Well, the solution are are quite simple. I mean, you have a couple of ways to handle this problem. The first things that you could do is just wait and see for a fill. So I want to enter that particular option. I just put a limit order and wait to get fill. If I won't get fill, I will try to move the strike to the closer strike price. Well, consider that all the strategies I'm adopting are quite simple. Most of them are just short strangles, so edged with the future, as I explained. And in order to be taken live, they must show robustness, and they must show similar results moving around the parameter. So it won't be a problem just to move to a closer strike price if I won't get the fill on that strike. So this is my experience, and consider that I'm working with a portfolio of these strategies since 2011. So I have many real data to compare with my backtest that came after all this. So I'm quite confident telling you that it won't change the results at the end.
Yeah, okay. So digging into the differences between option strategies and, I guess, pure futures strategies, do the concepts that work on one tend to work on the other and vice versa, or do they have different behaviors that kind of inhibit that?
Well, with future is most a matter of direction, whereas with option you must also pay attention to implied volatility and time. So consider that a mere reversion strategy in mini S&P 500 future produces often a better result when using options to trade the same trading signal. So sometimes I'm just substituting the future with options without many tests. Could happen that I need to backtest what happens, and but it's very rare to find very different results when using option strategies instead of the future. With option strategies, you better control risk, so maybe you better control drawdown, but maybe you get less net profit at the end, but usually if a strategy is a good strategy with future, it could be good also with options. It takes it needs to be a strategy that takes me a few days in position. I mean, you can't work with options with intraday strategies. I can't stay in an options position for a couple of hours. There are too high transactional cost to do to work with option this way. So my strategy is kept position open at least a week, no less, from a week to 1 month. This is my sweet point.
Yeah.
And the only exception is with some strategies on equities. Options that I developed to trade around earning release, where position could last from a few hours to a few days, but this is an exception.
Yeah, okay. And what about splits? How do you handle those, for example, when VXX has a 10-for-1 split?
Well, I trade VX6, but just the ETN, so not options on VX6. And I think that the easiest way to handle is to close the position and to reopen the position after the split. So this is the easiest way to handle it. But I usually trade options on VIX index. I prefer that kind of option than VX6 options.
All right, thanks, Luca. Now, for options beginners like myself, what would you recommend they do to get started if they're interested in learning more about options trading?
Well, I think that my best advice is to control risk. I mean, risk control is the mantra of every seminar. It doesn't matter if you are dealing with options trading system, with forex, with spread. Managing risk is what you should focus if you want to survive another day in the market. So this is my best advice. This is not enough. I mean, trading is not just a matter of techniques. It's a matter of discipline. It's a matter of human emotion. So you can code your strategy, you can test your strategy, you can analyze the robustness, take it live, but you must be prepared to suffer. I mean, trading is suffering. It means suffering. And during the drawdown, it's not easy to stick with your plan to continue to follow your strategy, even if it's an option strategy or a trading system on futures or FX or whatever you want. This is the reason why you should approach this business with a portfolio of strategies. It's easier to overcome this period. So my best advice could be to control risk and to approach this kind of business with a portfolio approach.
Yeah, I know you do a lot of classes and you have a lot of students. What are some of the main problems or mistakes that you see your students making?
Well, I think that the worst error is the lack of discipline. They start to follow a strategy and they quit to follow the strategy after a row of losing trades, and without considering that maybe this is a physiological situation, so the strategy just performed the same in the past. But you always are focused on the earnings, on the fact that the equity line is increasing, and you won't consider the dark side of this business, which is the drawdown. So the worst error is not to be there to with the strategy, following the strategy when the strategy comes to work again, and just took the worst part of this business, which is the drawdown and not the run up.
Yeah. Okay. All right. I just want to switch over to volatility a little bit more. You touched on it a little bit earlier, but I know you've done a lot of work on volatility. Why is it so interesting to you?
Well, working with option means working with model to forecast prices. So that's considered a traditional trading system, for example, but also with implied volatility and time, as I told you before. So you can make an estimate of the future volatility if not starting from the past volatility. So volatility is the main topic when dealing with options trading, and you can't afford to ignore this topic. Let's consider if a trading system is an engine, volatility is the fuel of these engines. Every trading system developer must take into account the volatility in the market in an entry setup, and at the same time, every options trader must take into account implied volatility dynamics, because they can influence the final results of your strategy. So volatility is the main topic when dealing with options.
Yeah, and what about if we just talk about futures trading systems for a minute? There are a number of applications to using volatility in futures systems. What do you think are some of the most interesting approaches there?
Well, you can directly trade volatility using derivatives, VOIX future, for example. You can spread VOIX on different expiration, but you can also take into account that they exhibit a different behavior than the volatility index. So working with these derivatives is not the same that working with the volatility index. You can analyze the volatility index to work on equities or the underlying future, but it's another way to work this volatility. So I think that both are interesting application, but you must be aware that you must approach both worlds in a different way.
Yeah, when I was doing some research on your website, I noticed you had quite a lot of volatility information there, and obviously options. But there was also some interesting ideas that kind of maybe you could say behaviors or characteristics that you've noticed in the market over time, and you've been able to build strategies out of these concepts. Where do you find these ideas? Like, where do you get your inspiration for things to test?
Well, your podcast. Oh, okay. Okay. I think that internet is a great source of new ideas. So okay, your podcast, but also other website, but books, and I can also make some research on my own with the TradeStation platform. I love this platform, so I always use this platform to maybe sometimes to research the market, to see something that is not visible by with my eyes, with the eyes of a human. So these are, I think, the main source where I can take my ideas.
Yeah. Okay. Now, I know that you have a volatility program. It's not in English, but for English-speaking people who want to get started in applying volatility to futures trading systems or any type of trading system, I guess, what steps would you recommend that they do to get started there?
Oh, yeah, true. My website is in Italian. I'm sorry, and you can Google translate it, but we will translate many contents. We just started with translating the Option Lab section. I told you before, the software that we are starting to sell, and our aim is to translate other section of the website. I think that if you want to start trading volatility, the easiest way is to analyze the volatility index to trade equities or to trade the underlying future. Then the second step is to move to trade directly the volatility derivatives, but this takes some more homework, because it's a completely different world from the world of the index. You must take into account the contango, the huge contango that is present between these expirations. So the forward curve is very important to analyze, to monitor, and I think it's not the easiest way to approach trading systematically. It's a very niche to work on that. So it's not for everyone, I think. It's easiest if you just consider the volatility index as a confirmation tool with a mirror reverting strategy on equities market. It's just the easiest ways to approach volatility.
Yeah. All right, thanks, Luca. Now, I want to switch over to talking about the IFTA Conference for a moment, because I know that you're one of the presenters there, and I was actually looking at the list just the other day, and there's a lot of excellent speakers there, so that's going to be a great conference. Can you, what will you be presenting at the IFTA Conference? What will you be talking about?
Yeah, this is an annual meeting with technical analysts coming from all around the world. And after Tokyo and Sydney, Milan, I think Milan in mid-October will host the next conference. I'll be one of the speakers, and I'm going to present an analysis of concurrent portfolios of option strategies, starting with naked strategies, then move to hedging the strategies with futures, and showing, especially in particular, showing how different weights in this portfolio can make a big difference. So my topic will deal with option strategies and with portfolios of options.
Yeah, okay, that sounds exciting. Now, I think that's mid-October, isn't it? And as you mentioned, it's in Milan. So
Yeah.
if anyone's interested or they want to go on a holiday, it's a good place to go. And you'll get some, you'll meet some good traders and get some good trading education as well. So how can people find out more about the conference?
Yeah, there is a website which is IFTA conference.com, and just simply Google search and you will find that the first result is the IFTA Conference page, and you can get all this information from this website.
Yeah, okay. Awesome. All right. Thank you very much for that. Enjoy that conference. Unfortunately, I'm going to be in the States at the time, so I won't be able to make it. But yeah, I'm sure that's going to be a great event. So enjoy that. Now, I just want to start wrapping up with some quick closing questions. What's the biggest lesson that you've learned through trading?
I think that is to control risk. I mean, I know maybe I will repeat myself, but I think control risk is the priority for every trader. And I learned this lesson after 2008 with a terrible trade on with weeks options, where with the trade that I didn't control, I just eat up 1 year and a half gain working with that same strategy. So that was quite an alert. And since 2008, I really started to focus on how to control risk, and I changed my approach to systematic approach from discretionary approach. And I think the systematic approach is easier to control risk than with a discretionary approach. When you must decide when to exit, you can just put stop loss, but there is always a new reason to stay in the position or to move the stop loss. With the systematic approach, it's a bit different, and you are more disciplined with that kind of approach. It's better. I mean, I prefer that kind of approach.
Yep. Okay. Cool. I think a lot of traders got a lesson in 2008 because I did as well. So, you know, that turned out to be something beneficial, I think, for traders that are still around from then. It doesn't feel positive at the time, but if you can make it through, yeah, you're right. So
that period was maybe the best teacher, the best teaching experience in my life, I think.
Yeah. Okay. What about what's the best trading advice that you have ever received?
To control risk? Okay. Yeah. Okay. No, but I think this is one of the advice a trader, a colleague gave me after that episode of 2008. And I think that was a good advice in the right moment, and just was well accepted. So I think it's to control risk. I must repeat myself, but it's to control risk.
Well, you might repeat yourself again in this one. What do you think is the most important ingredient to becoming a successful trader?
Okay. Not to control risk, but as I told you before, discipline. Okay, discipline.
Yeah.
Especially when you start trading, I think discipline is the most important factor. And you can't be a trader sometimes. You must be a trader, always be a trader. So if you decide to follow a plan, you must stick with it, and you can't change your plan or just to go out of the market because you just have been hit with a stop. So discipline is the key. I mean, this is what I realized in these years.
Yeah. Awesome. And what's your favorite trading book?
Well, I suppose mine is not an option. So I would suggest the book of Sheldon Nattenberg, which is Option Volatility and Pricing. Also, Macmillan books are really interesting. But I think that the Sheldon Nattenberg book is a must-read book for an option trader. So I would suggest that book.
Okay, and I understand you've also got a book, but it's in Italian, right?
Yep. Exactly.
Okay, so if you speak Italian...
Our editor is not going to translate it, so you need to learn Italian if you want to.
Right, okay. Okay, awesome. And what's the best way for listeners to get in touch with you?
I think the best way is come to visit my website, which is QTlab.ch. And as I told you before, it's in Italian. I'm sorry, but I'm promising you that in the next few months we will start to translate many sections of this website, because we are just starting to enter the English market. So up to now was just a website where to publish some articles in Italian, just addressed to Switzerland and to Italy, and but I've decided to move and to just to translate everything in English, and to move maybe to other country to start with a few seminars and so on. So this is my promise. Okay.
Yeah. Okay. Awesome. Well, good luck with all that. I know when I went to the website, I used the Google Translator. It was pretty poor, but I still got some good ideas there as well. So I recommend people go and have a look and see what you can find. There's some good stuff up there. So thanks for that. All right, Luca. Well, thanks a lot for your time today. I really appreciate having a chat with you. Now, excuse me, is there anything else that you'd like to mention before we finish up today?
Well, no, nothing, I think. I mean, thank you very much. It was a pleasure and a surprise when you get in touch with me to make this interview. I think that maybe it's a Stefano that you interviewed a few weeks ago that maybe quote myself with in that interview. So maybe we just get in touch after that. So it was really a pleasure, Andrew. Thank you very much. And I always follow your podcast. I think it's a great service, and go on this way. I think it's you are doing a very interesting work for systematic trading.
Oh, thank you very much. I've actually had in the back of my mind, because we met a few years ago in New York at a trading workshop, and I had it in the back of my mind all those years ago, and it finally got around to it. So it's great. It's great to finally have you on the show. Thank you very much for your time, and we really appreciate it. And I wish you all the best. So thanks again, and ciao.
Thank you. Ciao.
Okay, bye. Okay, well, that's it for this episode. Thanks for listening. I hope you enjoyed the show. Come on over to bettersystemtrader.com. That's where you'll find all the previous episodes, all the transcribes, all the show notes, and all the free weekly trading tips. bettersystemtrader.com.